Well, hello, everybody. Steven Sitkowski here once again. Welcome to this week's edition of Market Insights. So, this morning I headed up into the mountains, do a little snow skiing. It was absolutely spectacular. Bluebird day, snow was soft, runs were lovely. And then I come home to Armageddon. I mean, the market's melted down. Everybody's scared to death. I'm getting text messages from friends of mine asking about the economy. And so I'm going to do for you what I do for them. Kind of make sense of what's going on. Very interesting times. So let me share my screen with all of you good folks. Hope your day was all right, aside from the market. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So, what's moving the markets? Recession is now the big word, right? Up until about 2 weeks ago, nobody was mentioning anything about a recession. And then we saw an inverted yield curve where the interest rate on the 3 month was higher than on the 10-year, which is sort of a weird dynamic. It is a flight to safety. If you think about it, shouldn't you get a higher rate of return for tying your money up for a longer period of time? Traditionally, that's how it works, but every now and then the interest rates will end up inverted. And by the way, that is definitely a historical signal for recession, although we saw that throughout 2022 and we didn't have a recession. So here's my take. With tariffs, could they have a ripple effect in the economy? There's no question about it. That's certainly possible. What do you want to keep an eye on so that you're not listening to hyperbole as it relates to recession? Number one thing that I'm looking at is the labor market. So I generally have a feeling that as long as people can work and make an income and pay their bills, you don't have a recession. Secondly, I look at consumer spending, which is still going up 3 to 4% a year. And why are people able to spend? Because they got jobs. So until I see the job market shrink or consumers kind of shutting off from making any purchases, then I think the probability of a recession, candidly, are very low. Now, why do we care about a recession as it relates to the stock market? Oh, simply because if the economy goes into recession, stock market goes down. And what we're seeing now is kind of the wall of worry, as it were, that, hey, maybe this could happen. Therefore, I'm going to get out early. And that's completely understandable and reasonable. But I think the likelihood of recession now, I was on record in 2022 when everybody else said, I mean, literally at one point, 100% analysts said, we're going to be in a recession or we're in a recession. And I said, no, labor market's too good. Consumer spending is too good. And we never even sniffed a recession. So hopefully I'll be correct again. Now, if the data comes in different than anticipated, if I see interest rates going up and spending going down, okay, I'll sort of recast my position. But at this point, don't see it happening. 82.3% of all NASDAQ stocks were down on Monday. Kind of sucks. There's really no place to hide when it came to the NASDAQ. Delta Airlines stock fell 11% on earnings warnings. So might be a good time to start shopping for discounted fares. Hopefully, flights will get a little bit cheaper. I am astonished at how expensive travel is these days. It is remarkable that anybody can afford to do it. But yeah, Delta, the fact that they're worried about their future revenue and earnings numbers Is that a red flag? No doubt about it. 10-year Treasury has dropped to 4.196. So it wasn't that long ago we were worried about the 10-year going above 5%. That didn't happen. If we get it below 4%, that would be fantastic, unless it's due to the fact that the economy is just so weak at that point. It's kind of like having low blood pressure is a good thing, right? Less taxing on the heart, unless it's because your body's shutting down, then it's not such a great thing. So it's kind of a fine line in between there. And oil prices, they're predictably lower. They're at 65.77. So I think energy stocks might be a decent place to hang out. Of course, there's a lot of unknown as it relates to what we're going to be doing relative to drilling and exploration and pipelines. If they turn those on full blast, does it lessen the demand for crude as now we have an oversupply? Just a whole lot of unknowns right now. And I suspect it's going to take a few months to get all this sorted out between the things we've talked about and the tariffs. And, if government starts cutting a bunch of jobs, those people go into the unemployment system and they become less likely to spend money. There's a trickle down effect to all of this. Frankly, I don't think that the job cuts at the federal level are going to move the needle at all, but it feeds the narrative. And that's what's got everybody kind of freaked out. What to watch this week? No event scheduled today, tomorrow. We got small business optimism coming out, and it is forecasted to move down from 102.8 to 101, a little less optimism. That would make sense as fear goes up. Job openings, this is the JOLTS report, supposed to come in at 7.6%, excuse me, 7.6 million. There's no such thing as a percent when it comes to job openings, which again, 7.6 million advertised jobs. People can get work, and as long as they can get work, they can pay their bills. Wednesday, we get the CPI number. So there's inflation. Last month it was 0.5%. We're expecting it to be down to 0.3. And year over year, moving down from 3% to 2.9. Not a big move, clearly. Core CPI expected to move down from 3.3 to 3.2. Nothing huge, nothing for us to do. If we get higher than expected CPI, that could be problematic. So we will be watching that. Initial jobless claims, last week, 221,000. We're expecting 225,000. That's just a fine number. Then we get inflation at the wholesale level. That's a producer price index, the PPI. So that'll come out on Thursday. And PPI year over year, 3.5%, core 3.4. There's not a forecast available yet. So it's one of the main pieces of data that the Fed looks at as it relates to interest rates and overall monetary policy. And then Friday consumer sentiment. That's going to be interesting. It is right now forecasted to move lower from 65.7, 63.2. Bottom line is optimism is going down. Consumer sentiment is going down. People are afraid. You want to get them really nervous? Let's see another spike in inflation. Don't think it's going to happen, but that would exacerbate the problem. If all of a sudden it looks like inflation is more under control, given everything else that's happening, the Fed would be much more likely to cut rates. So this is last week's heat map. I'm sure it felt like for some of you for the last week, the market has just been obliterated. Some stocks have had a really rough go of it. particularly Tesla, down 22%, and it was down previous to that. So ever since Elon Musk has been involved in government issues as opposed to running his company, I'm sure he's still involved. I mean, he's a pretty smart business guy. I doubt that he's not paying attention, but the perception is, and sometimes perception moves markets. Perception is he's too busy to worry about the car manufacturing business, and the stock has definitely taken a toll. Costco down 10%, Walmart down 10%. Some of the industrials, Caterpillar, John Deere, are up, expecting more um, construction and manufacturing here in the U.S. Nvidia is down 6.21%. I've got something even more interesting on Nvidia. Very candidly, surprised me when I saw it. It's coming up here in a second. So definitely more red than green. The green, healthcare, which has been a lagger between the 11 sectors. Energy is doing just fine. I think that is a decent place to hang out. And some of the industrials are okay. Um, so yeah, not a lot to pick from. Now, this is a 1 year heat map. Nvidia now for the year is only up 20%. I mean, it's still a nice rate of return, but I'm accustomed to looking at a 1 year heat map, seeing Nvidia up, 150 to 200%. So big changes there for sure, but still way more green than red, which is obviously a good sign. The market breadth overall has been pretty darn good. And of course, there are some stocks that have exceeded, like Walmart. I've been doing covered calls on it. Costco, I've been doing covered calls on it. Meta, I've been doing covered calls on it. Alphabet, up 26%. Broadcom, 36%. Berkshire B shares doing covered calls on it. JP Morgan. But what's happened is you don't see a whole bunch of this stock's up 100%, or, we saw that a few months ago. That's a thing of the past. Market sentiment is really bearish. It's a little less bearish than the previous week. It's the bearishness fell from 60 to 57, but compare that to the historical average of 31% feeling bearish over the next 6 months. Historical average for bullishness is 37.5. We're down at 19.3. People are scared. This is a time to make money. I sit back and I'll just let everybody lose their mind, watch the market basically come in, and then you can start cherry picking. It's called high quality stocks on sale if you do it right. In terms of the Fed, they're forecasted to have their next rate cut, and there's a super high probability. So we're expecting the next rate cut in June. It's about a 50-50 chance that we'll get a rate cut in May. So that's going to be all data dependent, as we've heard Jerome Powell say over and over again. So right now we're looking at one in June, another one in July, another one in September, and then hold, and then next March. Beyond that, it's anybody's guess. But the fact that for this year we're forecasting 1, 2, 3 cuts, that's a far cry from zero not too long ago. So the good news is, again, as long as we're not moving into a recession, stock market loves rate cuts. 1 year sector returns. This does a really good job of putting things into perspective. This is how you keep from sort of losing your mind. So the S&P for the last year is up 9.5%. It was up much more than that. But for the last 12 months, closing today, 9.5%. Look at the sectors that have beat. Utilities, communication are both up more than 20%. Financials has doubled the rate of return on the S&P. Staples is up. And then kind of we'll call it a push. Consumer discretionary, industrials, and tech are all within about 1.5%. Then REITs, and then we kind of go to healthcare, which has made nothing, energy, which has made nothing, and materials, which is actually down 4%. Again, I really think there's some low risk opportunity in the energy sector. Let's take a look at the charts. This ought to be plenty ugly. I haven't looked at this today. Yep, check it out. So we crossed below the 50-day moving average, and we have just sank. And part of the problem is, I'm going to come down here to where we closed. I don't see any discernible level of support. Let's go to a 1 year. Okay. Well, maybe. So this was old resistance, which might act as new support. That is the tiniest little glimpse of short-term optimism. Maybe we do get a bounce off of this level for that reason. Otherwise, if not, um, you know, and we're headed down to 5,400. That doesn't hold. Now we're down to about 5,200. So um, I'm not sure that this week there's going to be any announcements made that don't come from the White House that make investors feel a hell of a lot better. I don't think there'll be anything that'll make them feel worse, but I sort of feel like most likely scenarios for the balance of the week, unless we get some positive economic data. I don't know where that's going to come from, but maybe something, out of the new administration saying, hey, we got you. But that's not what the president's been saying. President's been saying is, number one, basically he said, I don't worry about stock market. Okay. Those of us that are in the stock market worry about it. I wish he worried about it more. It impacts everybody's lives. And he is calling for, volatility and a tough patch. We're certainly going through it now. So this is going to be one of those, keep your head calm, watch. Opportunity will present itself, whether that's in a week, a month, 3 months. And when it does, the savvy who know when to pounce, they're going to be buying everything at a discount. And those of us who know how to trade options, we're going to have a really good opportunity on our hands. So I'll just keep reporting to you week to week. I'll let you know what I see, and we'll take it from there. Otherwise, have a blessed balance of the day, and I'll be talking to you soon. Bye for now.